Good morning. Here's a comprehensive summary of the major financial, macroeconomic, and market news driving South Africa, the African continent, and global markets. Global markets, regional African economies, and South Africa's domestic landscape are reacting heavily to the geopolitical crisis in the Middle East today. The blockade of the Strait of Hormuz, which began following the outbreak of the Iran war in late February, is driving a massive supply-side shock through energy, food, and the fertilizer supply chains. The major financial headlines across all three regions for Wednesday, 20 May 2026, focus on inflation numbers and central bank policy shifts. Global macro, the Hormuz oil shock. The primary driver of global market sentiment remains the disruption in the Strait of Hormuz, a critical maritime passage carrying roughly 20% of the world's liquefied natural gas and seaborne crude oil. Commodity pressures. Oil prices have broken past $100 per barrel, directly feeding global inflation forecasts. Currency markets. The US dollar index, DXY, remains relatively flat but structurally supported as global traders maintain a risk-off stance, closely tracking developments in the Middle East and the Russian leader's current diplomatic visit to China. Central bank realignment. The anticipated global interest rate easing cycle has effectively ground to a halt. Central banks globally are moving away from pricing aggressive rate cuts, pivoting instead to a restrictive hold to tightening bias to keep long-term inflation expectations anchored. Africa regional policy divergence and rate decisions. African central banks are forcing a massive strategic policy shift. Sub-Saharan Africa is highly exposed to imported energy costs, prompting an active wave of monetary policy decisions today. Ghana is cutting the benchmark rate by 50 basis points. This is a rare outlier, and inflation remains subdued at 3.4%. Policymakers are extending an easing cycle to support growth despite regional pressures. And Nigeria is holding rates steady, and they are meeting for the first time since the escalation. And policymakers there are standing pat to evaluate the full scope of currency and all impacts. And Mauritius is also holding rates steady, putting together clear data on pass-through inflation from shipping bottlenecks. And Egypt will be deciding on Thursday, but I think they'll also be holding rates steady. And they facing currency pressures and administered price adjustments. And then Rwanda will also be deciding on Thursday, and then they are expected to hike their rates. And then price growth has returned to double digits, forcing a decisively hawkish turn. And then South Africa, inflation surges and the South African Reserve Bank pivots. Locally, the structural narrative of the past year, marked by stable electricity supply and ongoing infrastructure reforms, is being tested by aggressive imported supply shocks. Currency and fixed income. In early trading, the South African rand hovered steadily at 60.68 cents against the US dollar. In fixed income, the benchmark 2035 government bond strengthened slightly, with the yield slipping 1.5 basis points to 8.915%. The inflation print. Stats SA is releasing April Consumer Price Index (CPI) data today. Headline inflation is projected to accelerate significantly to a consensus of 3.9% to 4.4% year-on-year, up from 3.1% in March. The surge is entirely supply-driven, sparked by two consecutive heavy domestic fuel price hikes, filtering directly into logistics and transport networks. Secondary risks include the pass-through of these fuel shocks into food prices and wage negotiations. South African Reserve Bank interest rate outlook. With inflation temporarily pushing back toward the upper limits of the South African Reserve Bank's target range, the era of expected rate cuts is officially over. Monetary policy outlook. While the South African Reserve Bank is widely expected to hold the repo rate steady at its upcoming meeting on the 28th of May 2026, a 25 basis point hike to 7% is now active on the table for the coming weeks if fuel pressures worsen. Economists expect a highly hawkish, potentially split vote among policymakers as they balance rising inflation risk against weak domestic consumer demand. And then corporate and JSE highlights. There's been new investment products reflecting the high inflation environment. Easy ETFs officially listed 3 newly actively managed exchange traded funds AME, AM ETFs on the Johannesburg Stock Exchange today. This brings the total JSE ETF market capitalization past 267 billion. And then lastly, financial automation scrutiny. Academic and regulatory discussions have flared up in the financial services sector today regarding the rapid deployment of hyper-realistic AI voice agents by SA banks and insurers. Calls are intensifying for strict upfront consumer disclosure under the Financial Sector Conduct Authority's strict treating customers fairly framework. Those are your financial news for the 20th of May, 2026.